Hey everyone, welcome back to Financial Market Insights for Traders. I'm Sophia, and today we're going deep into one of the most fascinating, high stakes moments of the year, the Black Friday season. But not just the chaos of doorbusters and online carts. We're talking about what that frenzy actually means for investors. Because behind every sale, every discount, and every line outside a store sits one big question: which retail stocks are going to soar, and which ones could stumble as we head into 2026. This episode is packed. We'll unpack how the 2025 consumer is behaving, what the data says about holiday shopping trends, how AI is quietly rewriting retail, and which companies are most likely to stand out when the dust settles. And yes, we'll get into what all of this means for your portfolio. So let's start with the shopper, because understanding how people spend is the first step in understanding how markets move. The typical holiday shopper in 2025 is careful, deliberate, and more strategic than ever before. Gone are the days when people rushed out impulsively for whatever deal they could find. After years of inflation, uncertain housing markets, and rising living costs, consumers have become extremely value driven. According to Deloitte's Retail Outlook, households will still spend around $1,500 this season, but they're spending it differently. Essentials and discounted items are taking priority over luxury goods or big ticket indulgences. This shift is forcing retailers to get creative. They can't just slash prices and hope for volume anymore. They have to manage promotions like surgeons, precise, targeted, and profit protective. They're using data and technology to decide exactly when and where to discount. And that's where artificial intelligence really comes into play. AI has moved right to the heart of retail. Think about it: chatbots handling customer questions during Black Friday, algorithms predicting what you'll want before you search for it, and pricing systems that adjust minute by minute depending on demand. Adobe's e-commerce data shows that personalization powered by AI can lift conversion rates by 15 to 20%. That's not a minor tweak. That's a full-scale transformation of how sales are generated. Amazon, Walmart, and even smaller online retailers are rolling out these systems at a rapid pace. And then there's the omni-channel revolution, the blending of online and physical retail. We've officially hit the point where almost 3 out of every 4 shoppers use multiple channels before making a purchase. Maybe they scroll on their phone, check reviews on a laptop, and then pick up the item in store. Or maybe they browse in person, but buy online for delivery. Companies like Walmart, Target, and Home Depot have built entire logistics networks around this behavior. Their buy online, pick up in store programs, or BOPIs, are quietly driving serious profits. Convenience has become the new currency. Zooming out to the bigger picture, the economic landscape for 2025 and 2026 is what I'd call cautiously optimistic. Inflation has cooled off. GDP growth in the US is hovering near 2%, and unemployment is steady around 4. It's not a booming economy, but it's stable enough for confident spending if consumers feel they're getting good value. Bain and Amp company expects around 4% retail growth this holiday season, while Forrester forecasts total US sales could top $1.05 trillion. That's strong but uneven. The money's flowing toward retailers that emphasize value and smart pricing. Now, for traders like us, the question becomes, how does all of this translate into stock performance? Because Black Friday isn't just a consumer event, it's a market event. Every year, the retail sector turns into a data mine for analysts. Sales trends, order sizes, traffic numbers, they all feed into how investors price these companies for the rest of the quarter. Historically, the week from Black Friday through Cyber Monday can be volatile. The SBDRS and AMP wink with tongue sticking out retail ETF, ticker symbol XRT, often spikes when early results look strong. But if margins tighten or discounts run too deep, stocks can drop fast. We've seen it happen with Best Buy and Dick's Sporting Goods in past years. Companies that rely heavily on discretionary spending often struggle if consumers pull back or wait for bigger markdowns. So, what are the names to watch this time around? Let's start with the obvious one, Walmart. The company has become a hybrid powerhouse. Its partnership with OpenAI, which allows customers to chat and shop directly through conversational AI, has already lifted online sales. Add to that its dominance in groceries and essentials, and you've got a retail stock that could ride both consumer caution and innovation at once. Then there's Costco. This is one of those rare businesses that thrives on consistency. Its membership model creates recurring revenue and shields it from discount wars. People shop there because they trust the value. In 6 of the last 8 Black Friday periods, Costco has outperformed the overall retail sector. Next up, the off-price kings, TJX companies and Ross stores. These two live and breathe the treasure hunt experience. When shoppers feel squeezed, they don't stop buying. They just go where the deals feel smarter. That's why these stocks tend to shine in slow or uncertain economies. And of course, you can't talk about holiday shopping without talking about Amazon. Cyber Week is basically Amazon's Super Bowl. Between predictive logistics, same-day delivery, and AI-driven pricing, the company continues to dominate online retail in ways no one else can match. Interestingly, 2 other names to keep on the radar are Home Depot and Lowe's. They don't exactly scream holiday gifts, but their sales consistently hold up in Q4 because consumers often use year-end bonuses or extra time off to tackle home projects. These companies aren't as reliant on aggressive discounting, which means healthier margins and more predictable profits. Now, beyond the 2025 season, there are a few big shifts worth keeping your eye on. Social commerce, that's shopping directly through apps like TikTok, Instagram, or YouTube, is exploding. By 2026, it could surpass $130 billion in US sales alone. Retailers that crack this code early will capture younger audiences that no longer shop in traditional ways. Sustainability is another driver. Younger consumers, especially Gen Z, are gravitating toward brands that promote recycling, resale programs, or carbon neutral shipping. It's not just marketing anymore, it's part of the buying decision. And then there's buy now, pay later, or BNPL, services like Affirm, Klarna, and Afterpay. Adobe expects these flexible payment options to top $1 billion in transactions on Cyber Monday alone. That's huge for short-term consumer liquidity, but it also means retailers have to manage cash flow more carefully. Now, from an investing perspective, here's where things get interesting. More and more traders are turning to AI-driven analytics to forecast retail performance before earnings season. Platforms like Crystal Ball Markets have built tools that can track spending patterns, search trends, and even sentiment data in real time, giving traders a predictive edge. And in an environment this fast-moving, insight is everything. So how should you approach this season as an investor? Focus on fundamentals. Balance sheets and cash flow are what separate solid performers from hype plays. Diversify your retail exposure. Mix stable names like Costco and TJX with higher growth players like Amazon or Walmart. Keep an eye on early guidance from retailers. Positive updates before Thanksgiving are often a leading indicator of strong quarters. And if you want to spread your exposure, ETFs like XRT or IBUY can help you capture the sector without betting on a single company. Most importantly, trade with precision. Black Friday and Cyber Week are short windows where volatility can reward or punish quickly. Having a reliable, real-time trading platform can make all the difference. That's why I always recommend checking out crystalballmarkets.com, a world-class, user-friendly platform designed for traders who want professional-grade speed and insight. And if you're just starting out or looking to build a stronger foundation in trading and investing, you can also listen to the Crystal Ball Markets podcast on our ss.com. It's an excellent resource for learning the basics of market dynamics, macro trends, and smart portfolio management, all in plain, practical language. So, to wrap this up, Black Friday 2025 and 2026 aren't just shopping days. They're snapshots of the global economy, reflections of consumer psychology, and powerful catalysts for stock movements. The retailers that combine value, technology, and efficiency will win. Those that don't adapt may fade into the noise. For traders, this is your signal to stay sharp. Read the data, follow the trends, and position early. Because when sentiment flips during the holidays, it can move markets fast. I'm Sophia, and this has been Financial Market Insights for Traders. Thanks for listening, and until next time, trade smart, Stay curious and enjoy the season ahead.